With rising bond yields and the uncertainty regarding inflation, it's safe to say that the stock market's been pretty rocky over the last couple of days. So let's just see how it's affected my portfolio. What's going on, guys? Irish Wealth here. Welcome back to the channel. So today I'm just going to walk you through the changes I've made in the last couple of days and weeks to my portfolio. But first, before we get into that, could I please ask you to just smash the like button, as it really helps the channel out. So it's been a pretty turbulent month in the market. You can see here at my best I was up just over 11%, and now we've dropped down to just under 5.5%. So it's been a tough month, with growth stocks and tech stocks taking the biggest hit, those of which make up the majority of my portfolio. But really, I'm not worried at all. I'm just seeing this as a buying opportunity for my high conviction growth stocks. So if we go down to my individual investments, we'll start with NEO, that I hold just over 3 shares of. You can see has taken a bit of a tumble as of late. I haven't added much more to this yet, but I might do in the future. You can see here that there's a massive chip shortage for EVs, so this is actually even affecting Tesla as well, and the entire EV space. But the other news about them missing their Q4 earnings as well was another kind of factor which hit the stock hard, but I still think long term NEO has massive potential to grow. So next is Palantir. I've got just over 10 shares of Palantir. I've been adding to this periodically as it's been dipping, with an average price of $24.52. So I'm very happy with that. Maybe if it drops below $20, I might think of buying a few more shares, but for now I'm happy enough with the 10 shares that I have. And again, Palantir is a super long-term play. This is a buy and hold for many, many years. The CEO has even come out and said, if you're not willing to stay in Palantir for the long term, then find some other stock that interests you. So I'm happy enough to, keep hold of Palantir for a long time and see where it goes. They're really starting to increase their number of contracts. They're getting exposure to kind of small and medium-sized businesses, as well as their government contracts. So it's a really exciting future for Palantir. And I think by the end of 2021, things will be looking a lot better. Then we've got Square, who's been extremely volatile the last few months. It's been really up and down, but it's generally been a good performer for me when it's reached its heights of around the $275 mark. So I'm pretty happy with Square, and I accept the fact that it's going to be fairly volatile, especially with the fact that they've recently purchased a large amount of Bitcoin too. So I think the market's kind of associating, when Bitcoin's down, Square will be down. Same with Tesla as well. So I'm just accepting the fact that Square is going to be a little bit volatile over the next sort of few months and years, which is fair enough by me, but I think they're on the right kind of trajectory anyway. And if we go to Tattooed Chef, this is a new addition to the portfolio where I got just over 5 shares. I've been waiting for a price target of anything below $20, and I managed to get in at $19.28, which I was happy with. It's actually gone down even further now, so I might even add a couple of more shares while it is. So in terms of Tesla, I'll be looking to add to my position over the next couple of days, with my price target kind of around the $600 mark. I'm hoping it dips down a little bit more now and I'll buy in a bit more. Interestingly enough, the price dipped quite a bit, and then it rallied after ARK Invest released their report on their price target projection for 2025. I did a video on that if you want to check that out as well, one of my last videos. But then it's kind of dipped back down afterwards. So still a massive buying opportunity with Tesla. I'm really trying to get up to that 1 share at least and try and build on that. But again, another really long-term play. It's not something that's going to shoot up a few 100% anymore. It's going to be a buy and hold for many, many years. So that's where I'm at with Tesla. And then I've got my ETFs, which have been performing extremely well, all in the green, especially the S&P 500, which I'm up just under 14% on. But again, for this period of time, I just see a lot more kind of upside potential in investing more in my growth stocks, my high conviction growth stocks. So that's where I'll be allocating the majority of my capital during this market correction. So that's the update, guys. I think it's important to share the portfolio when it's perhaps not performing as well. As a long-term investor, you're going to see these market corrections. It's pretty much inevitable. You're not going to avoid them. And you'll see with my kind of breakdown in my portfolio, you'll see my ETFs are always kind of carrying the load. They're doing nice, slow, consistent growth. But then my growth stocks would be kind of looked at more kind of riskier plays and will take a little bit more patience. But what I'm doing is I'm doubling down on my really high conviction ones, and I'm very confident that I'll see this pay off in the longer term. So if you enjoyed the update, guys, don't forget to give a like on the video and subscribe if you're new, and I will see you in the next one.